All right, welcome back for another episode of Carnivore Trades. Today is Wednesday, August 3rd, 2022. If you're not done so already, subscribe to the channel, give the video a thumbs up. Come find me on carnivoretrades.com for swing trading alerts and analysis. Big question is, how far can we stretch? Take a look at the markets here today. 1.75% up for the spiders and almost 3% up for the NASDAQ. Semis up 2.5 there. You see Apple up almost 4%, Amazon up over 4%, Tesla actually lagging a little bit, but still up about 2.5% here. Dow up 1.5%, Russell 2000 here up 1.6. Just a massive move across the board. Really, the only laggard is energy. For the most part here, as crude has taken a pretty good hit here today. We'll get into that in a little bit later. But overall, a pretty sizable move here for the spiders. So now 1.7, 5 minutes left or so in the trading day here. And you can see, obviously we cleared this 100 moving average. And now, it's really up to this kind of, this last pivot here at 417.44. And then you come into this red bar. So there's a pretty good amount of resistance up here. And, we did consolidate for 2 days, but I mean, that's not really equal, symmetrical to the consolidation here, right? So it's not really it's not enough of a pullback here, if you ask me. I mean, yes, we can push higher with light volume. That's what the volume does when it's this light. 51 million shares traded as we approach the closing bell here. So very, very light volume, summer doldrums type volume, typical of August. But we're getting stretched to the point where it's kind of ridiculous here. And really the triple Qs are much more so in that category of stretched. And we're seeing a huge move here after the market has already rallied here. So I think we are pretty close to a pretty good turning point here in the market. I've got the data all worked out already, and obviously the members will get that before anybody else. Well, we're coming into resistance here. So take a look here. We've been following this trend line, been kind of waiting for that to hit. My guess is we hit it probably tomorrow. If we don't, put in some type of a consolidation or pause day, we probably hit it tomorrow. And then you're coming into a pretty good resistance zone right up in here, between this little gap window and then the gap fill up there around 330 on the triple Qs. So this to me would be kind of your max move right now. But you're already kind of into resistance here, so I wouldn't surprise me if we gapped up here tomorrow, or at least pushed throughout the day tomorrow and got up to that first level and kind of pierced this trend line. But to me, Qs are into resistance, as are the spiders, and really everything else. So we need to be really careful here. Now, again, if the light volume continues, which it very well can, this market can continue to float up. So we have to be aware of that, and you don't want to jump in front of the freight train right now, but you got to be careful with your entry. But again, this market is getting very, very extended here. And take a look at the volatility index. You see the UVXY there getting pounded. So vol getting very close to that low that we put in on the 29th. So that was at 21.21 was the exact low. It'll be interesting to see if we do pierce that. I don't see the VIX getting below 20 here at any point, but it wouldn't surprise me if we did pierce it tomorrow, especially if we do gap up. But again, watch this too, because if this starts creeping up as the markets are rising, if the markets continue to rise, that will tell you that there's some accumulation of hedges going on. So a lot of things to be careful of here. But the market just had an amazing surge here off the lows, and we really nailed the bottom here in the summer rally, and it's been a tremendous move here. But when you see these huge moves after the market's already had a move, it's indication that we're coming into some type of resistance, and the FOMO's coming in there too. A lot of people are afraid to miss out now. They think the bottom is in, and when they should have been buying down here, they were panic selling, and now they're upset because they missed the move, and now they're probably trying to jump on here. If we gap up tomorrow, there will probably be a lot of retail investors jumping in on that gap up. So no, that's just the nature of the market. But again, advise everybody to be careful right here. We're in unprecedented times. There's lots of geopolitical stuff going on, so we got to be careful. But short term, market's getting really stretched. So that's really what we're going to leave it at. Anyways, semis here. We talked about that briefly, up 2.5% here today. So again, coming into resistance, we got above that 100 moving average. We talked about that the other day, but now you're coming into this previous breakdown area. So again, maybe it can push a little bit higher here, but there's a lot of resistance up here. This is where you fail the bullish pattern, and this was all that selling beforehand. So that's going to come into play here, and there's just a lot of longs trapped in there. So that's really the nature of it. But semiconductors, nice day. What can you say? IGV here, cloud software, really nice strong gap up this morning, gapped above that 100 moving average. So kind of a gap and go trend day there for the IGV. And now this is starting to get close to my max move area here. So as there is the closing bell. Now we'll check in on the spiders again at the end, but IGV closing out 3.2%. And again, coming into another resistance zone. So that was kind of your bear flag there. Anybody who bought here was, trapped into that. So, it's basically getting back tested now. But again, just like everything else, IGV having a nice little power move off of the lows today, and XBI as well. Again, just can't get through this channel, and I'd said that there's a lot of resistance up here, and even though it's got a nice bullish consolidation, this has a higher propensity of failing. I'd have to say the fact that it's not participating in the rally is a little bit of a concern. Now, yeah, we did have a gap up today, but we finished way off the highs and still couldn't even get above this high from July 20th. So XBI is a little bit of a vulnerable sector here if the market does start to roll over. So definitely keep that on your radar there. And then Dow Transports here. Got a little bit of a bounce today, so it was weaker yesterday. Obviously, we made note of that. It did reclaim that 100 moving average just by a penny or so, it looks like, or basically closed right on that, but still well inside of this reversal bar. So again, another sector to keep on your radar for a little bit of weakness. We did make a higher high here, but that was a pretty good sizable reversal yesterday, and the market did it on a little bit of an uptick in volume. And the market has, obviously, we've been noting that the volume's been very light, but this is a sector that, it did pick up a little bit of volume yesterday with that selling. So definitely a little bit on the weaker side there are the Dow Transports. Interest rates here, so talk about some volatility in the bond market. So we got a nice gap up on the 10-year. Just finished up 25 basis points here, or 26 basis points here on the 10-year, rather. We followed through on that reversal, but in the afternoon, you can take a look here. It really faded off the highs. So we had a nice pop in the morning, and then it really came back in. And if you look at the TLT, we actually exited this for kind of a fractional gain. We've been holding it for a while, but this actually doesn't look too bearish. So, it had a nice reversal here yesterday, and kind of, I'd never like it when you try to get above a moving average and a resistance area, and you get rejected in that fashion. Hence why we just moved out of it. But it had a nice little reversal off the lows, so maybe it can have a little bit more upside here. Again, yields, I don't really have too much of a clean read right now. I'll definitely know more by the end of the week. You see the 30-year here. If we can close back above this neckline on Friday, and the same thing goes for the 10-year, that would negate this head and shoulder pattern, and I would then think that yields are going to really rip to the upside. But they did back test it here. It got rejected on the daily. Both the 30 and 10-year. The 30-year actually finished negative a little bit, down 8 cents here on the TYX. So maybe it gets defended, and maybe we do play that out to target here, which would take you down to about 2.5 and then about 2% on the TNX. So yields are a little bit of a tough trade right now, but definitely no more by Friday's close. And then HYG here did push higher with the market, still didn't take out this high here, but what can you say? It held up okay. XHB, again, kind of like the transports here, had a little bit more of a bit of an outside day yesterday. Didn't really have that uptick in volume, but had an outside day, and then you finished up today a little bit before we dipped a little bit into the close. About the last half hour, did dip down considerably, but still finished in the green. This one may have another little push up in it if the market does continue to rally, especially if we get that gap up tomorrow. ITB here got a nice little push off that 20 moving average on that little back test. Again, an outside candle yesterday, so we'll see what it does here. You do have higher lows, so you got to respect that for now. But again, these are all on borrowed time, if you ask me as well. Same thing with VNQ. It's trying to put in kind of a micro bull flag right now. You had that outside day yesterday on good volume, and then just kind of a floating inside candle here today. But again, there's still a lot of resistance up in this area here. So we got to be careful with the VNQ. XLF, again, nice little pop here. If we take a look at JP Morgan, this one got hit early today, was not participating in the rally. And then a really nice, good reversal here off the lows. Look at that power surge there in the 10-minute, and then just chugged higher all day long. So that definitely helped out. So look at Bank of America. Yeah, similar kind of candle here today. Wells Fargo. Wells Fargo was a little bit stronger of a name here, but the XLF, again, just like everything else, had a nice little trend day here, 1.5% gain there. And then broker dealers continue to be strong here. Just pushed higher right on the open and had a little bull flag intraday on the 10-minute, and then just powered up pretty much all day long with the exception of the last hour or so. But broker dealers have impressively pushed through all of my price targets here. Now, again, you got that 200 moving average. Maybe it can get up there. That's going to be heavy resistance. See that big red bar right there? That was a breakdown bar. It was a rejection. And then if we look on the weekly here, you can see that coincides with that 50-week moving average, and a pretty sizable, that same breakdown bar is visible on the weekly as well. So got to be careful with broker dealers here. But hey, I mean, got to give them respect. They had a huge move off the lows, and like I said, they've really exceeded all of my price targets. So nice impressive move there for the XBD off the lows. All right, so flipping over here to crude, if we can get Thinkorswim to cooperate here. Crude was down pretty heavily here today, almost 4% drop. There we go. So almost a 4% drop, and hasn't quite taken out that low yet. So 90.56 is the level. I don't believe it got through that. Okay, so it did 90.38. So by 20 cents or so, we did make a lower low. Again, it does look like crude wants to come down and test this trend line here. We'll see what it does tomorrow. Maybe it gets a little fake out and we reverse higher, but I still think at some point it's going to do that. And if we look at that that trend line here, really what we're looking at is this monthly candle. So this big trend line right here, we're looking for a back test there. And then, below that, you got that 20-month moving average. And this is why I've been saying, crude's going to go lower. It's heading probably at least to 85, but I think closer to 80, maybe even sub 80. If we do flush out and get kind of like a panic flush on heavy volume. But you just, why do I think that? It just got too extended. You can't go parabolic forever. Eventually things have to come back in, and they got to come back to earth, and nothing can get too extended from that 20 moving average forever. I mean, like, take a look here back in 2016, look how extended you got. Eventually you got to just come back in, and go back to home base essentially. So crude here, did finish lower here, and that did drag down energy. We talked about XLE earlier. That was a weaker sector relative to the rest of the market. So a pretty good fade there on XLE. Kind of went right up into that necktie of the 50 and 100 that we talked about, and then two little kind of pullback days and then a sell-off. So not participating in the rally here was the energy stocks. XOP finishing lower as well, although it did come off the lows by the end of the day. Same thing with the OIH, although still an ugly outside candle there today. And then of course the outlier, as always, nat gas. Got about 10 cents away from my entry level. So I told the members yesterday, if we can get below 750, I consider nat gas for a long here. And we, 755 was the exact low of the day. Take a look here at the intraday on the 10-minute, just got 10 cents. I mean, who knows? It could have gotten to 748. I probably would have jumped on. I mean, 7-8 cents away from an entry here, but, and then just boom, up to the upside here on nat gas. What we're looking at here is this long trend line that goes back to last year, all the way to May, and then that's been an area of interest for nat gas the whole time. And you have that 50 moving average and upsloping 20 right in that area. You're usually going to get a bid off of that, and nat gas sure as heck did. Was up almost 9% at one point, but finishing up 7.59 as it currently sits right now. But a rocket fuel move off that area. Just wish it got a couple pennies lower. Would have given us a nice entry, but hey, sometimes that is the way the market works. All right, dollar index continuing just kind of a pause day. It was higher earlier in the day, and then it faded pretty sharply off the highs. But again, it got a bid off that 50 moving average yesterday, and then just kind of a pause after the big surge yesterday. We'll see what it does here. Again, like I said, I never got a full sell signal, so I wouldn't rule out a move to 110 on the dollar index. I really wouldn't. And you came down and tested that 50. It back tested. You back tested this kind of pivot right here. So, you know, dollar's holding up. It's behaving like it should. It's respecting the technicals. So that's all you can really say at the moment. You know, next step for a move up would be getting above this higher high here. But again, right now, there's nothing to say it goes either way, one or the other. And then gold here. Also kind of just a pause day after yesterday's sell-off, which is what you'd expect with the dollar index, you know, doing the same kind of thing, essentially to the inverse. And then silver, same kind of deal here, hitting that 50 yesterday, and then, you know, a pullback and a little bit of a pause candle. Nothing really too new to add to that. Platinum looks about the same, and palladium a little bit on the weaker side, as that was down a little bit here. Copper as well. A little bit of a pause candle here. Still really oversold. I mean, it had a nice move off the lows, but I still think you can get one more pop up here in copper. And then, you know, it's probably susceptible to another leg down. But for right now, it's hanging in there okay. All right, and then Bitcoin here. So Bitcoin, a nice little bit here, but not really moving with the rest of the market, right? So, you know, 1.85% gain for Bitcoin is really like, you know, it might as well be, you know, 1/3% if we can relate that to the S&P. You know, Bitcoin moves 5% in a day like it's nothing, right? So a sub 2% gain is not really a lot when you consider the NASDAQ was up almost 4%, right? So, but, you know, there's nothing wrong with the pattern. It's still nice and intact. You know, you got a nice little pop here and a pullback. You're bidding off that 20 moving average. We talked about that yesterday. We said we wanted that to continue moving off the 20 moving average if it's going to make a leg up. But for right now, it's like, you know, what's wrong with it? You know, if there was any day where it should have been up, there was today. So a little bit of a red flag there for Bitcoin. Ether, which has a better pattern than Bitcoin, you know, still is only up 1.3 on the session. You know, still green, still a good bullish pattern intact, but little bit of a surprise to see it not perform. Again, you'd think that today, if there was going to be any day, it would rally. It would be today, and really not much there on the chart. Now, there's still room for upside. Again, like I said, there's nothing wrong with these patterns, but definitely a little bit of a red flag that they weren't participating here. All right, so yeah, let's flip back over to the spiders here. Nothing really doing after the close here. Finished up 1.5%. Yeah, a little bit of a dump here into the close. Some profit-taking day traders moving out of positions, maybe some algo selling. But overall, we are into some pretty stiff resistance, if you ask me. But again, the market can hold up right now. So I just wanted to make that clear. If you do want to short, don't go heavy right now. I would advise kind of scaling in or, you know, dip a toe in the water here. But you got to respect that summer volume until we get closer to that cycle date. Anyways, guys, I'm going to wrap it up here. Come find me on carnivoretrades.com, and I'll talk to you all tomorrow.